What's up, everyone? We have so much to talk about heading into tomorrow. Apple just reported earnings and is all over the place in after hours. Amazon also reported earnings and it's not looking good at all. GDP data came out and I saw one of the craziest trades like over the past entire year today. So stick with us today, guys. We have a $42 million options trade at the end of today's video. I promise you, you do not want to miss this. So stick with us today. We have so much to talk about. Tom, looking at the market today with the heat map, it was a pretty red day. What is going on in this market?
Yeah, like you said, very red day overall. The heat map, honestly, doesn't look too bad. But whenever you look at the big tech stocks, obviously, this is what drove the market down. We saw Microsoft and Google both continue down after their bad earnings earlier in the week. Apple was down again. Meta's down. Amazon's down. So overall, Mike, pretty red day. Even though we did see some green come out of McDonald's with their earnings, Charter Communications was up a little bit. And we did see, for example, like Caterpillar beat on earnings too. But obviously, Mike, the big tech stocks drove down the market. And you can see the SPY was pretty red throughout the day, but especially in after hours here as Amazon really got killed, Mike. They are down over 20% here in after hours as they have weak guidance going into the holiday season. This is really bad to see, Mike. Obviously, the holidays are a big time for Amazon, and to see them miss on their holiday forecast is obviously not good. But let's get into some of the numbers. Their revenue did come in at 127.1 billion versus 127.46 billion expected, and the advertising revenue actually beat, but their web services revenue missed. That came in at 20.5 billion versus 21.1 billion, which is why they missed on the revenue. So overall, Mike, pretty bad there. They did beat on their EPS though, which was good, but obviously that revenue and that guidance going into the holidays is not good because, like I said, the holidays are huge for them.
Exactly. So it wasn't like a horrible report for Amazon, but it's like, when you have such a key part of your business, the holiday season coming up, and you basically tell everyone that we're not expecting to make as much money as you guys thought we were going to, it's like, it's not necessarily a good sign. So, they lost on revenue, but did beat on their earnings per share. So, it was just kind of like a lackluster earnings event, and the stock's down, and the stock went from 110 all the way down to 90 in after hours, and it flew right below that $100 support level. So, not looking good at all for Amazon. And then on top of that, Tom, Amazon is actually below its low of the entire year. So it just made a brand new low.
Yeah, it really did, Mike. That low of the year was there right around 101, really close to 100, like you said, and just blasted right down below that, all the way down to lows, all the way down around 87.50. So what a drop, Mike. I cannot believe this happened. Very rough move for Amazon. Obviously, it's not what traders want to see. I know a lot of people have been looking for the market to turn back around here, Mike, and it looked like a lot of stocks were starting to form good supports, but obviously now with that happening, SPY's dipping down in after hours, and it looks like SPY might be back on the downtrend looking at that daily chart. But we also can't forget about Apple, Mike, and Apple is actually not doing too bad in after hours. So they did fall, but they are making quite the comeback right now as their earnings actually were pretty good, Mike. So they beat on revenue and EPS overall, but there were some slight negatives. They missed on iPhone revenue. Mac revenue beat, which was great, and it was actually up 25% year over year, which I thought was very interesting looking at this. But they also missed on services revenue, which was another bad thing for Apple. But I thought looking at the article, Mike, it sounded pretty good overall. And I thought that it was really good to see how that said that they actually countered the industry trends on smartphone sales, which was pretty good to see. They said that overall the industry was kind of falling, but obviously Tim Cook said they clearly countered industry trends there. So that was nice to see. But yeah, it did just miss on some estimates, but the stock is kind of coming back to even right now.
Yeah, Apple stock has been all over the place in the after hours. I feel like their earnings were not bad to the point where the stock's gonna dump like Meta or Amazon, but at the same time, it wasn't like a great earnings report where it's like the stock's gonna shoot up. Like it was good, but just not good enough for this market. Another notable thing to keep in mind is that Amazon or Apple grew their revenue by 8% this quarter, which is awesome, but they would have grown it by over 10% if the dollar didn't move like it did. So over the past year, we've seen the dollar just explode, and that has definitely impacted many of these blue chip companies. So when you have the dollar moving up as much as it is, it really hurts like the revenue overseas for companies like Apple or Amazon or anything else really. So that's important to keep in mind. Looking at the market as a whole, Tom, it's been a pretty good past couple weeks, but not great. What was interesting is we actually saw some pretty good GDP data today, but it just wasn't enough to hold the market up.
Yeah, exactly. And the market was doing pretty well this morning. If we zoom in here on the SPY early on, it was actually up a little bit in pre-market, and then it opened. We did hit off support at 380 and start boosting back up as well, all the way up to that 385 resistance, which ended up being a huge level. But yeah, that GDP data did beat. It came in at 2.6% versus the estimate of 2.3%. According to Amazon, I know that on the economic calendar, they were expecting 2.4%, but obviously these analysts always are, fluctuating by 0.1% or so on a lot of these estimates. So keep that in mind. But overall, Mike, crazy move on the SPY. That GDP data could not hold it up. But I will say the SPY was in a pretty crazy technical setup today. We saw a very nice head and shoulders pattern start to form over the past few days, and it ended up playing out very well here in after hours with how these earnings went down. Obviously, though, if the earnings went well, this could have obviously went the other way, but I thought this setup was very interesting. Whenever you Google head and shoulders pattern, it looks very textbook and almost exactly like this. So I really like that 385 resistance today. We saw a huge bounce, and it really created a lot of day trading opportunities.
You know it. All right, so one stock I really want to talk about is Tilray. TLRY. I talked about this stock in yesterday's video, and it was actually one of my favorite setups from yesterday, and it is still my favorite, or one of my favorite setups going forward. Tilray is a stock that has had a lot of bullish unusual options activity over the past couple weeks. This is a marijuana stock, and with midterms coming up, this can definitely be huge for the marijuana industry as a whole. One thing to keep in mind with marijuana stocks is that a lot of times they just do nothing, but every now and then they just have an explosive move where it's just like jaw dropping. So zoom out a little bit on the charts, Tom, so we can give everyone a view of how this one moves. It has all-time highs all the way at $300, and we can see on that original uptrend, it was just so parabolic. And along the way, there have been multiple explosive uptrends that we see anytime we have some sort of major event or catalyst. Midterms can maybe spark something like this with Tilray. It's just one stock I'm really keeping on my radar, considering how oversold it is and considering the events we have coming up just in the market, you can say.
Yeah, exactly. These midterms are going to be huge for these marijuana stocks. I know that we keep talking about them, guys, but they are setting up very well. They're holding up above support. They did fall down a little bit today, Mike, but with the overall market kind of doing what it did, I honestly don't blame them too bad. But obviously, the cool thing with marijuana stocks, Mike, is that they're not overly correlated to the SPY. It looks like Tilray this year has been kind of correlated with it, obviously, because the SPY has been falling down with Tilray. But overall, Mike, these stocks move with their own news and their own catalysts. So I think it's a really good play going forward. One of my favorite stocks, Mike, I know we're talking about a crazy volatile stock here with the marijuana stocks. I'm actually going to talk about a safer stock being Kraft Heinz. I found this stock to be a really good hold through all of this bad market volatility lately. You know, this stock has just been holding right in the middle of its range. If you wait for a good support bounce on this one and you're able to grab shares pretty low, I really like this. It's safe. It's slow. I will say they've had a lot of bad movement over the past few years, but they had some bad issues going on. Warren Buffett actually bought this one all the way up at the top, and he's still holding it. So I think it's interesting, Mike. It's a slower mover, but it might be a pretty good thing to hold in your account throughout all this downwards price action we're seeing.
What I like about KHC is that it has basically no correlation to the SPY, at least as of right now. Some people might look at that as a bad thing, but I very strongly disagree with that opinion. In the market that we're in now, a lot of times it's good to have stocks that are not correlated with the SPY because the stock will just move freely and it won't be influenced by whatever crazy event is happening in the market at the time. So that's another good thing to keep in mind. Another one that I'm watching is Teladoc, TDOC. This is just a short-term play, guys. So it's a short-term play. Just want to reiterate that. TDOC is trading for around $27 right now. And it has all-time highs all the way up at $308 per share. This stock has a lot of things going on with it. It's been a very brutal past couple of years for this one. It is very oversold. They reported earnings today and the stock is starting to get some of the upwards momentum back. It is definitely on my watch list for like a short-term momentum type play. You know, when it's this oversold and you have some sort of good event like good earnings, I've seen many setups where these situations just continue up for a couple days or a couple weeks. So it's definitely on my radar for just like more of like a short-term play to the upside, but it is pretty risky.
Yeah, I actually like that support here, Mike. It looks like it is kind of holding up. It is down a little bit in after hours right now with the SPY falling off, but we'll have to see how it does. I'm glad that some of these stocks have been continuing to move up after reporting good earnings. Enphase was another one, Mike. They had another great day today, so cool to see with that one. I know another big one I'm watching is Square, Mike. They are actually in a pretty good wedge pattern here, and with the SPY tanking down in after hours, it looks like Square is actually starting to fall back down a little bit. And it looks like over the past, 5 or so trading days, Square is a little bit overextended to the upside. So I will be watching this one for a potential move down tomorrow. Now that it fell out of that wedge, looks like a pretty good technical play. And with the overall market falling, I could see Square probably having a pretty bad red day too if the market holds down.
Sounds good. One thing I want to say really quickly is if you guys like our videos, make sure to subscribe. We post brand new videos every single day, so definitely make sure to subscribe and you'll see our videos more often. But Tom, I'm pretty excited heading into tomorrow for a couple reasons. One, we have Apple and Amazon going crazy in after hours. They're starting to pop back up, but a lot of the big earnings from like the major tech stocks have passed. Apple, Amazon, Microsoft, Google, Meta, they're all taken care of. So tomorrow we're going to see how the market fully digests those reports. And I think either way, whether it's the upside or the downside, there's going to be opportunity for trading because we're going to start to see some good moves rather than investors just on edge about what might happen in after hours with earnings.
That is a really good point, Mike. I know that there's been a lot of uncertainty this week, and it's definitely caused a lot of volatility. And I feel like you said, a lot of people have just been very fearful of some of these reports. And with some of them coming in negative, it's just caused a lot of downwards price action. So yeah, hopefully we start to see some better movement going forward. I did notice, Mike, tomorrow we're going to see the oil plays report along with ABBV. So watch out for those. I know those oil plays have been going nuts this year, and I know AbbVie's even been pretty crazy the past few weeks. This has actually been on a nice uptrend too.
True. You mentioned some crazy downwards movement, and when you mentioned crazy downwards movement, we have to talk about Meta. And when we talk about Meta, we have to talk about today's member of the day, Deep Sea, which had a mind-blowing trade today. If we look at the screenshots he posted, I'm almost speechless looking at this. So he made $79,000 today off of some Meta put options from earnings. That was one trade. The next trade he made like $34,000 off another put play on Meta. He held overnight. It was literally one of the craziest plays I've ever seen. Overall profit on the day, $116,000. Huge shout out to today's member of the day. Awesome Meta trade.
Yeah, that is amazing, Mike. 116 grand on Meta. What a play. What a gamble. Mike, what did we calculate it? I think he put something like 8 to 10 grand in the play overall and ended up $116,000. Great play. Meta really sold off, ended up down 24% today at close. So, wow, Mike, what a trade, what a play. I cannot believe what I saw this morning. Well, I know last night when I went to bed, I was talking to Christian and I was like, man, tell him to post those screenshots because that is going to be something else to see. But yeah, what a bad day for Meta, though, Mike. I mean, I hate to put a damper on the 116K play there, but wow, 24%. What a move.
True. All right, Tom, let's get right into the momentum plays for tomorrow. With the first one, we have Shopify to the upside.
SHOP, really nice move and nice double top. Go ahead and make them break above 34.55.
All right, with the next one, we have UPWK also to the upside.
Good old Upwork. Very nice here. Good after earnings move maybe here. Go ahead and make them break 13.10.
All right, and then with the last one, we are watching CCL for a play to the downside.
Yeah, CCL's really selling off in after hours. There's a big support at 8.45, so make them break right below there.
All right, so we are watching CCL for a potential play to the downside tomorrow, only if it breaks below the level Tom listed. And then we are watching UPWK and Shopify for potential day trades to the upside tomorrow, only if they break above the levels Tom listed. But guys, it is now time for the $42 million options trade I saw today. One of the craziest and usual options posts of the entire year, and that is with Shopify. Today, some whale dumped $42 million into the Shopify 25 strike call options for January 20th of 2023. Shopify is currently trading for around $33 per share. For those of you who don't know like how call options work, basically when you buy call options, it's like a leveraged way of betting that the stock will go up. Other important things to know about this setup is, like I said, Shopify is trading for around $34, $33 per share right now. It has all-time highs of around $176 per share. They just reported good earnings, and that's part of the reason why the stock is up 17% today. Shopify is a company that realistically is not going out of business anytime soon, and realistically they're just going to do nothing but grow in the future. At least that's my opinion. Of course, do your own research. But when you see a hedge fund take such a large, bold position in a company that is growing so much and that's so oversold and that's up 17% on the day, it really is eye-catching. Do your own research for this play, guys. To me, it looks very bullish, and I'm very excited for Shopify going forward.
Yeah, and it had a very nice day today, Mike. I mean, with earnings, it exploded up 17%. So what a play. That's a huge move, Mike. $42 million. I mean, talk about a gamble here on Shopify. But, you know, as we know, these hedge funds are very calculated and they have a lot of strategy that they implement and they do a lot of research on their stuff, guys. So pay attention to this. It's a huge play, Mike. It's back on the uptrend. It's been bouncing off that big support at $30, and we're back above there. So that's amazing. I know it is down a little bit in after hours today with the market down, but keep it on your radar. It could obviously recover up over the next couple of days for sure.
And another thing too is like this call option is in the money, so it's like I don't want to call it safe, but it's not like a complete gamble. Some other things to keep in mind is that this option expires on January 20th of 2023. So there's time, there's time for the setup to develop. So guys, don't just blindly think Shopify is going to go up tomorrow. This is a setup over the course of a couple months. So either way, I'm definitely going to keep a very, very close eye on Shopify, not only tomorrow, but over the next couple weeks and months. It is truly one of the most like jaw-dropping setups I've seen over the entire year.
Yeah, I mean, that's crazy. $42 million. And with how low it is, it seems like there's almost no more room for it to fall, Mike. It's starting to get so low. It's crazy. But, we have been seeing some stocks break below recent supports. But with that earnings, moving them up, that's a very good sign, in my opinion. So watch them, guys. I think it'll be big. And I know, Mike, I'm going to keep them on my radar and probably get a nice swing going on them.
There we go. Well, I am pumped for tomorrow. Most of the major earnings are out of the way. We have some good setups for tomorrow. Do you have any final thoughts?
Yeah, the market went crazy today, guys. It is still down a lot in after hours, so keep that in mind. I'm not overly bullish for tomorrow, but it seems like SPY is kind of bouncing off this 374 to 375 support right now in after hours. If that holds up, I think the SPY could potentially maybe just hold its ground tomorrow, but I'm not bullish, Mike. Overall, we had a lot of downwards movement tonight with earnings and everything like that. I know Apple's kind of staying stagnant, but that 20% drop on Amazon was something else, guys. And we just keep seeing these bad moves, Mike, like Amazon, Meta, Snapchat. Like these 20% drops are getting to be crazy.
You know it. If you liked the video, make sure to subscribe. Join the Stocked Up Discord group. It is completely free, and it'll be that first link in the description and the comments down below. Besides that, let's end the week strong.